Hey, what's going on, everybody? It's your boy Deonte Burden, aka Mr. Short Dollar himself. Here, I want to give you guys an intro to small business funding, the short dollar way. I know a lot of times people have a lot of questions in regards to business funding, what the different options that are, exactly what it is, how to get funding, what different types of funding, when do you need funding. I want to give you guys a video just to break down all those questions and explain to you in English so you're not necessarily talking to somebody speaking to you in financial terms, you're getting lost, okay? Now, before we get started, I want to reintroduce myself. Again, I am Deonte Burden, aka Mr. Short Dollar himself. You guys know Mr. Short Dollar, we talk about personal finance, entrepreneurship, real estate investing, and business. Easy way to stay updated without it. Over 300 videos that we have listed, also over 150 grants posted on the YouTube channel. Is hit that dollar sign in the bottom right hand corner and make sure you hit that bell to get notifications each time we upload a new video. Okay, let's get back to what we're talking about. Again, this video is regarding small business funding, just an introduction into it and all the different facets of small business funding. Put my handsome face back in the mix, slide me back over here. Okay, let's talk about small business funding options. Typically what you have, the different options being traditional term loans, that being your loan where you're getting a fixed product, that being a fixed product being a loan with a product that's a certain dollar amount that you're paying over a certain amount of time at a certain rate. SBA loans, those are loans that are backed by the SBA, not necessarily coming from the SBA, they're coming from another regular financial institution, but the SBA or Small Business Administration is backing the loans to secure to say, just in case this person defaults on the loan, we will cover them, okay? You have business lines of credit. A business line of credit in a nutshell is just a line of credit that a bank is offering you, not necessarily straight a loan amount, but you have accessible that amount to you. And guys, I do want you guys to know, I do have a video coming out soon where I'm going to break down each one of these products to let you know exactly the difference between the different ones, right? The next one is business credit cards. That's just credit cards used for business purposes. Grants, we have over, like I said, over 150 grants listed on the YouTube channel. Those are just funding options. It can be cash, it can be different other kinds of services, be it, advertising amounts that a certain grantor may be giving you out to use it in regards to your business, or crowdfunding. That being you put something out there, say we're looking for a certain amount of funds to fund this next project or fund this next creation that we have, and the greater public submits money to it, to fund it. Like theoretically, that's what it is in regards to crowdfunding. Keep my big old head over here. When do you need funding? Okay, these are some basic questions you need to ask yourself when you need funding, because a lot of times people are going through and say, I don't need funding, I don't need the money, I'm doing okay. But these are the basic reasons why a person would need funding for that particular business. You want to hire more staff, you want to move to an additional location, or not necessarily move, just even acquire additional location. May want to buy more inventory, refinance old debt that's become too expensive. Like again, if you got a certain credit card that, or a loan that you're paying at a certain rate and you can get it at a much smaller rate or get things done at a much smaller or 0%, it kind of makes common sense just to transfer it over, move it over, reestablish that debt at a cheaper price. Obtain working capital, pay for rent, covering payroll, several things like that. Again, these are reasons why you may need funding. Next, we go into how much do you need? This is a very important question, because a lot of times people will just throw out some arbitrary number. They'll just say, okay, we need funding. Give me 100,000, give me 40,000, give me 50,000, 6,000. And the actual lender will be like, what do you need it for? I just need it for startup costs, to buy an equipment. It is very, very important that you already have calculated what you need. I always advise people to be on the safe side. Always ask for more than what you need. The reason why you ask for more than what you need, if they come back with a lower amount, you're not disappointed, right? Still kind of possibly at where you were looking to be at, but you definitely didn't ask for exactly what you wanted. You got less than that, and you're still kind of in a bad shape because you couldn't at least get what you wanted, right? So how much you need, and figuring it out, you're looking at, what do I plan to use the money for, okay? How much return can I get from this business use? Again, we're actually acquiring this at a certain rate where the ROI or return on investment be greater than the cost we have for spending money on that. That's a whole nother video, guys. coming out in regards to doing that what we call cost benefit analysis. Matter of fact, that's a current video. Just check it out, cost benefit analysis. And then what business expenses, including debt and interest payment, do I already have? Again, we're trying to figure out, get that ballpark number on how much money we need to be asking for. Basically, there are two types of small business funding. We got debt financing, equity financing. Debt financing and equity financing, okay? You're like, D, what in the hell is the difference between those two? Pretty much in a nutshell, we'll look at debt financing, equity financing. Debt financing is a way to fund your business by borrowing money, okay? You're just borrowing money. A lender gives you a loan and you pay them back over a certain period of time with interest. That's what you call basic debt financing. When you look at what's called equity financing, that's where a way to raise capital by selling ownership in your company in exchange for money from investors. You give them a portion of ownership and control in your business. It's the same theory that just like if you're buying stocks in a business or anything like that, just acquiring some kind of capital. But on the other side, you're purchasing the stock from a particular company. That company is doing what we call equity financing. They're taking the money that they sold you for particular shares of that company and use that as equity to finance maybe what, same thing they're doing on the debt side, maybe expanding, buying equipment, things like that. We go into this next phase. How do you choose between debt and equity financing? Now, these are some basic questions you want to kind of ask yourself when you're looking at to decide which one you want to use. If you want to actually acquire more debt through borrowing, or if you want to sell some particular ownership for your company. So basically, you look at pretty much what industry you're in. How volatile your industry, how are there any technological changes coming about? How is that industry, set up where you can actually, do you feel more comfortable with, borrowing the money or selling ownership? Looking at your network. When we say looking at your network, who do you know? What kind of people can you leverage relationships out? Maybe you can actually borrow a particular item instead of paying for it or selling ownership in your business, or acquiring a loan for doing it. Looking at that network, who can you reach out to help you reach a certain goal, and then maybe even to acquire that finance or that particular financing through debt or through equity. The amount of funding. Again, we're looking at how do you choose between debt and equity financing. You're looking at the amount of money you want. I mean, at the end of the day, is it more beneficial from a cost perspective to actually, borrow some money than actually give out ownership of doing it? Are you losing a lot of leverage in regards to giving out your ownership? The interest payment that you're going to pay in the big picture with borrowing the cash from a financing standpoint be too expensive for you to do it once you start laying out the math. Control over your business. This is very important, what we were just alluding to. When you start overextending yourself or over leveraging, over borrowing, over giving, that can be a trap in regards to you setting yourself up where you lost so much ownership in your business. I know you guys heard all the time in regards to people that lost so many shares of their company, and now they no longer have controlling decision-making power over the company because they gave out so much of ownership of their business. And why would you say you give your ownership? Again, over time, you actually financing and growing your business by giving up certain portions. Sometimes you may kind of leverage yourself out where you have too much ownership, or too much of your ownership that you let out through equity financing. Same thing if you're borrowing cash, you can be borrowing so much because you have this surefire thing that you're trying to do, and you overextended yourself, and now you got all these loans that are about to default, and they see you through a whole spiral of a phase with your business. So you got to be very, very careful that when you choose between debt and equity financing. And that's pretty much in a nutshell what that is your basic intro to business business funding and business financing. I got some more videos coming out in regards to the different funding options, but I just want to kind of just give you guys a brief summary in regards to what that is. Again, I am Deonte Burden, aka Mr. Short Dollar himself. Please go to the YouTube channel, Mr. Short Dollar, where we talk about personal finance, entrepreneurship, real estate, investing, and business. Again, the easy way to do it, hit that dollar sign in the bottom right-hand corner. Look forward to giving you guys some more information soon. Take care.